You're tuned in to Chairman's Briefing, and I'm Rachel Lee. Now, this episode is brought to you by Antimony Resources. Let's get started. Why is the US dollar performing so poorly this year? Well, the quick answer is that unpredictable and unfunded economic policies, which are threatening the safe haven role of the US dollar, are spooking investors. The US dollar suffered its worst first half performance since 1973. The dollar index plunged 10.8% in 6 months as Trump's economic policies triggered a global sell-off in greenback holdings. The catalyst was April's Liberation Day, when Trump unveiled sweeping tariffs on most countries. More than $5 trillion vanished from the S&P 500 in 3 days. Treasury markets saw massive outflows, driving government borrowing costs sharply higher. Then Trump called a 90-day tariff pause on April 9th, except for China. But damage was done. Investors remain weary of dollar-linked assets as the OECD slashed U.S. growth forecasts from 2.2% to 1.6%. The so-called One Big Beautiful Bill could add $3.3 trillion to national debt by 2034. This would push the debt to GDP ratio well above today's 124%. Moody's already stripped the U.S. of its top credit rating in May. Markets expect 2 to 3 Fed rate cuts by year-end as Trump pressures for lower rates. This combination of fiscal recklessness and monetary easing is destroying credibility for the dollar. Gold dropped on Thursday after stronger than expected U.S. jobs data took the pressure off the Federal Reserve to lower interest rates at the end of this month. The unemployment rate came in lower than the forecast, while payroll numbers beat analyst expectations. Now, this data gives Fed Chair Jerome Powell more room for a wait-and-see approach throughout the summer. Markets now expect 53 basis points of Fed rate cuts by year-end, which is down from 66 basis points before the jobs report came in. Fed rate cuts typically boost gold because the metal pays no interest. Lower rates make gold more attractive compared to yield-bearing assets. Despite this week's sell-off, gold remains up more than 25% this year. But the metal trades about $170 below its April record high. Geopolitical tensions and concerns about U.S. debt levels continue to support long-term demand. Americans who previously hoarded gold bars and coins are heavily selling, while Asian investors continue their aggressive buying. This split shows how different regions view the same global economic risks. Philip Newman from Metals Focus notes that many American gold buyers lean Republican and approve of Trump's approach. This reduces their motivation to hold gold as insurance against economic uncertainty. The selling pressure is obvious in U.S. markets. Dealer premiums for American Eagle coins dropped to $20 over spot price from $175 4 years ago. U.S. mint coin sales plunged 70% in May compared to last year. Asian markets tell the opposite story. China's bar and coin demand rose 12% in the first quarter. South Korea, Singapore, Malaysia, and Indonesia all gained over 30% as investors fear tariff damage to their economies and local currency weakness. Now, the question remains, which side will correctly read the global economic landscape? Onyx Gold delivered strong follow-up results from its Argus North Zone discovery in Ontario. The company hit 91 meters, grading 1.8 grams per ton gold, including 32 meters at 4 grams per ton in a step-out hole drilled 50 meters from their original discovery. These grades matter because most gold mines operate on 1 to 3 grams per ton. Onyx is delivering economic-grade intercepts with high-grade cores above 4 grams per ton over significant widths. The 150-plus gram-meter grade thickness indicates strong economic potential. 3 of 4 holes have proven mineralization continuity over 100 vertical meters. This shows that their system extends well beyond the initial find rather than being an isolated pocket. The zone remains open for expansion in all directions. ONYX has completed about 6,000 meters in 17 holes as part of its fully funded 10,000-meter program, with more results pending from this gold system. Arizona Metals released its mineral resource estimate for the K Mine project in Arizona. The market reaction was swift and negative as tonnage fell short of expectations. The underground resource totals 9.28 million tons, grading 3.18% copper equivalent with solid gold, silver, copper, lead, and zinc grades. But markets expected 15 to 20 million tons based on years of drilling. The company delivered roughly half of that amount. But this could prove extremely conservative. The resource sits within less than 5% of a 10-kilometer strike length of prospective rocks. Arizona Metals has clear expansion potential, both along strike and at depth. The company plans a preliminary economic assessment for the second half of this year. The real test will be whether additional drilling can prove up the tonnage that markets are expecting from this high-grade deposit. Antimony Resources delivered spectacular drill results from its Bald Hill project in New Brunswick. The company hit 3 zones of massive stibnite, returning 28.8%, 21.9%, and 17.9% antimony over a 7.4-meter interval. These are exceptional grades for antimony, which is a critical metal where China controls 90% of global supply. The company has outlined antimony mineralization over at least 300 meters, with 10 additional drill holes completed that are showing visible massive stibnite. Results are expected in about 2 to 3 weeks. Canada's Senate passed legislation to fast-track approval for natural resource and infrastructure projects, including mines and oil pipelines. The bill eliminates some provincial trade barriers and gives cabinet power to decide how laws apply to national interest projects. Prime Minister Mark Carney calls this Canada's core domestic response to Trump's tariffs as the country tries to reduce economic dependence on the U.S., which takes 75% of Canadian exports. Indigenous and environmental groups are furious and have threatened protests. Indigenous groups argue that fast-tracking sidesteps their obligation to be consulted and denies them real input on projects that affect their lands. Legal challenges are coming, and Ontario Regional Chief Abram Benedict says that he definitely sees court fights happening over both the legislation's constitutionality and individual projects once the bill becomes operational. The bill now awaits signature from Governor General Mary Simon to become law. Chile's Congress approved legislation to cut mining permit times by up to 70%. The world's top copper producer currently takes up to 12 years to approve mining projects. The new law creates a digital platform for permit applications and establishes a dedicated investment office. Economy Minister Nicolas Grau says that these changes will maintain environmental standards while dramatically reducing approval times. Chile's northern Antofagasta region will see the biggest impact. The mining hub has been waiting for regulatory reform as companies hold back billions of dollars in potential investment. The timing here is critical. Chile expects to control 27% of global copper production by 2034, up from 24% last year. With copper demand rising from electric vehicles and renewable energy infrastructure, faster permitting could unlock significant new supply. And there's your briefing for this week. If you're not subscribed yet to this channel, make sure to do so before you go. I'm Rachel Lee, and we'll see you next week.